I'm going to bring in Nicholas Wealth Management President David Nicholas. And David, you know, I'm not dissing the companies. A lot of them have potential. A lot of them have sexy stories. But in the last 2 decades, I would say hundreds of billions, maybe trillions of dollars have been ripped off from the American public via the initial public offering or the SPAC markets. Is there any chance that this kind of stuff could change? Like, the IPO market is dead. It's going to come back to life. Will anyone say, hey, this time we should not crush the American public?
Well, Charles, Lucid should change their name to Ludicrous, because I agree with you. I mean, it's absolutely insane. I mean, look, the IPO market is down big. It's down 40% year over year. If you remember, during the first 4 months of 2021, there was about 130 billion of IPOs that went to market. You know what it is this year for the first 4 months? 3 billion. It's down like 90%. So again, there's a lot of crap that's in the market. I'm sorry, but Lucid included. The market is having to work through this. I think we will be back, but this is not the environment to take a company public. It's just not. But usually when a company is going public, the early investors are the ones that make all the money, unfortunately, Charles, and the investors are left holding the bag.
But when I started on the street over 30 years ago, you didn't have a company stay private and they have one offering, a mezzanine, A, B, C, D, E. They have so many offerings, they got to use 2 letters, a triple A, a triple E. They take it from a 0 valuation to 30 billion. Then they go public at 80 billion and they tell the public, welcome, you can own some of this. And all of them cash out and they make billions and they buy the world's biggest yachts. It is a ripoff, David. We've got to speak up. They are crushing the American public. They're crushing the capitalistic system. This must stop at some point. And this is what I tell people. Wait. You got to wait now 2 or 3 years. Let these stocks come down because they all come crashing down. I'm looking at a couple of them. A firm, they report after the bell. I want to see what they do. I'm not going to buy it. Would you be sifting through the ashes looking at some of these names?
I think you got to be careful, Charles, but who subsidized all that wealth? The Federal Reserve. I mean, you get $1 trillion in IPO in an interest rate environment that's historically low. But look, there's some names like Warby Parker. You got to look at the company, what they produce. Producing sunglasses, eyeglasses, contacts is a lot easier to produce than automobiles. So I think you could look at a name like Warby. You could look at a name like Oatly. I don't drink the stuff. My wife loves it. She thinks it tastes great. These are names that I think have been beaten up enough where I think you could start to nibble on this and actually make some money.
All right. And you, by the way, speaking of buying something that had been beaten down, I know you bought Royal Caribbean and Carnival Cruise Lines. Everyone gave up on them last year. They're killing it this year.
They are, yeah. Look, this comes out, if you look at the jobs report, leisure and hospitality has created 73,000 jobs per month on average over the next 6 months. We see it in some of the companies that we look at closely. I think hospitality is a play that's not going away. If you just look at RCL, they've raised guidance by 40% for the quarter year over year. If you look at what consumers are spending on the boat, consumers are actually spending more than they were in pre-19 levels. So I think this is a bullish sector to be in. Also, if you look at jobs, leisure and hospitality is still 400,000 jobs less than where it was pre-COVID. So there's a big gap to fill, Charles, and I think that ends up nicely in earnings.
All right, and full disclosure, I do have some subscribers in Royal Caribbean as well. David, it's great seeing you, my man. Airbnb after the close. I may have to shoot you a tweet. All right.
That's right. That's right. Good stuff.
Same here. My take